What's up, everybody? It's me, Sarah Grillo, and today I'm going to be talking about this point. Flat fee is not just about the cost savings. And this is a myth that everybody says, oh, the flat fee advisors have come in. They're going to undercut all the AUM advisors. They're trying to just be the lowest cost provider. Okay, let's stop this myth right now. Okay, so let me just show you a few examples of why this is wrong. And I'm also going to tell you why, if you're just focusing on the cost, you are missing the big point, okay? First of all, flat fee does not always equal cost savings. If I have a $5 million portfolio and I'm working with a 1% AUM advisor, I'm getting 1% of my assets charged in fees. 1% of 5 million, I'm paying the financial advisor $50,000 a year. Now, am I getting ripped off? I don't know, because if I just have simple planning needs, I have a simple portfolio, it's all held in ETFs or something, there's not a lot of trading that's desired. If I don't have like real estate in 10 different countries or a special needs child or estate planning issues or concentrated positions, and there's not a lot of planning that's going to be done, then maybe it's not worth the $50,000. Most likely it's not. Okay, fine. So now there's financial advisor, flat fee advisor over here that's charging $500 a month. So for $6,000 a year, that's a cost savings of $44,000. If they can do the same thing, voila, yes, we just saved a ton of money as the customer, right? Fine. Now, flat fee doesn't always work out that way though, because let's suppose that I have a $250,000 portfolio, or let's say $500,000 portfolio. I'm paying my financial advisor $5,000 in fees a year if they're charging me 1% of my AUM. Okay. Now, a flat fee advisor, that same flat fee advisor that charges $500 a month, is going to be charging me $6,000 a year. And even at that, a lot of the flat fee advisors do not go that low. It is very common, and I've seen flat fee advisors charging $10,000, $12,000, in some cases even $15,000 or more a year on a flat fee basis. So how is that cost savings to the client if it's a small portfolio? It's not. In that case, just from a cost perspective. Now, I'm not talking about the value delivered for the price that they're paying. I'm just saying on a just straight up cost basis, they are better off working with an AUM advisor. It's going to be cheaper. Like I said, what are they getting for that? Different story. Okay, so let's just dispel the myth, first of all, that flat fee is about cost savings, because it's not all the time. But here's the other thing I think we need to understand. Okay, any service can be valuable for whatever price the client is being charged if there's enough value being rendered. But that's just the thing about business, right? It applies in anything. In real estate, I'm buying a home. It's a really expensive home. If it's a fast growing area, if I can get a lot of cash flow out of it, if the property manager is doing a great job and I have happy tenants, I don't have to worry about the headaches, if the tenants pay on time, all of this, right? Okay, is it better off to buy a cheap home just because it's cheaper and all the accoutrements be cheaper, right? Is that worth my money if I'm like stressed out and gonna go bankrupt over it? God have mercy on us. No, it's not. Okay, so it's just the thing about business. We always have to keep in mind that to some extent you really do get what you pay for. Let's hope. Okay, now, but here's what people miss about flat fees. The flat fee is about transparency. It's not necessarily about the actual cost savings. So what do I mean by that? If I express to you when we're sitting in a meeting that services cost $5,000 a year, as opposed to just saying 1% of this unknown asset amount that fluctuates with the market, that creates uncertainty for me. And I would argue that a lot of advisors do this on purpose, that they like that lack of clarity. Because if they had to sit in front of every client and say, I am charging you $12,000 a year. I am going to charge you, probably this last year I charged you $15,000. This year I'm probably going to charge you $17,000 because the market looks like it's been going up the last few months, right? It's a harder conversation to have than just saying 1%. I mean, you think about it, like I'm in the market for a home right now, and I'm looking at this house that's like, the guy's like, well, yeah, my real estate commission fee is 3%. I'm like, oh, that doesn't sound like a lot, 3%. Well, if when I do the math on it, I figure out I'm going to probably be paying the guy $15,000, right? That doesn't sound as good. See? So it's about the clarity of understanding what the actual hard dollar is that's coming out of your wallet. And a lot of clients don't even realize this because they have it set up, the advisor sets it up so that the fee is debited out automatically at the custodian. So a lot of times the client does not even realize what the hard dollar fees are that are coming out of their portfolio that they're being charged on a periodic basis. So it's about the actual recognition in real life terms of what the fee means for the client's life. Okay. Second of all, flat fee allows you, and this goes for any kind of flat fee, flat project fee, flat monthly fee on retainer, flat hourly fee, anytime that you are assessing a known quantity with a value, okay, that you are assigning a value to a known quantity of something, flat fee per month, flat fee per hour, etc. Both quantities are known, 12 months in the year, right? Amount of hours that I'm going to be billed for or that I was billed for is this or that. It allows you to equate the value of the services provided with what the price is of those services. So I could say my flat fee is $10,000 a year. My hourly rate is $250 an hour, roughly. So we're looking at probably about 40 hours this year that I will service you that is commensurate with $250 an hour for those 40 hours, coming to roughly about $10,000. Okay. So what it allows us to do is give, again, a picture to the client in real life terms. Oh, okay, I'm getting 40 hours of service for this person. So from this person, from this advisor. So there are 52 weeks in the year. That's looking like 1 hour roughly every week and a half or something like that. They can assess what the actual work amount, what the tangible quantity of value is that they're going to be getting. And it's better for the advisor too. It's better on both sides. It's better for the client because it gives them a picture of what exactly will be done and is that valuable enough to me on a per hour basis that it's going to come out on per hour is this and then it's going to come out to this. Do I want that? Do I need that? Do I need all of these things? Or are they just bundling it so they can charge me more? It allows the client to have that vision and that clarity and that transparency to be able to discern. So it heightens our discernment as consumers. The other thing is it does in fact heighten our discernment as the advisor, because the advisor can look and say, well, I have this client who I'm going to charge a flat fee of $10,000 and it looks like they have pretty straightforward needs that's consistent with what I do for other people. I have all the tools ready. I have all the planning materials ready. I have the portfolio analysis set up. They fit in well. This is going to be someone I could service for that 40 hours. Now, let's say that they're a business owner. Let's say that they are an international real estate investor with houses in 20 different countries, introducing all kinds of complicated tax law changes, et cetera. Am I going to do that for $10,000? Probably not. If I'm an advisor, I'm going to say, I can't do this for $10,000. I have to either go with them and explain to them why it's more. Hence, I'm commanding more value from the relationship. Okay. And they are going to have to pay for it. And because of this need that they've expressed to me. So it creates a discernment factor for me as well when I'm the advisor, because it allows me to pick and choose clients and to design a practice where what I'm doing is going to be the costs to me internally of my time, of my team's time, of my software, of all my resources, my office space, my office time, et cetera, is going to line up with what I expect to get in fees on an annual basis. And that's the biggest thing that people really overlook, because if you look at it, a lot of practices are very overrun. They're very random. They have all kinds of clients where they're serving clients with $20,000 because they were a referral from a very large client or a family member or something like that. And the cost of working on that client is probably not being justified by the value that the advisor is getting out of working with that client, or the price, or the fees that they're getting from that client, right? It might, you might say in a subjective way, well, it's worth it to us. But I mean, I've seen practices that are all over the board where there's just no specialization. There's no rhyme or reason. They're just running like their hair is on fire with these clients that are coming in because there's no systematic ordering. There's no logic. There's no clarity. And ultimately, I think it comes out being a little bit unfair to the clients, and maybe unfair to some clients, but not as unfair to the others, because what you might have in those cases is the larger clients that might be getting more time and attention, but are being charged a heck of a lot of money, might be, for example, subsidizing the smaller clients, or the smaller clients might in fact be getting not enough hours of time for the fee that they're paying. So in that case, they're paying the overall overhead for the firm, but then not getting their fair share out of it. So the design here is to bring back fairness, logic, and clarity to the way that services are aligned with the price that's charged for them. And that is why a flat fee is about transparency and not as much about the just cost savings of it. So thanks so much for joining me here today and for watching. If you'd like to learn more, my name is Sarah Grillo. I have a gazillion blogs on this, and I'm the evangelist of the Transparent Advisor Movement, which is a community of flat fee, advice only, and hourly planners who are trying to bring back the virtues of fairness, logic, and clarity to the practice of financial advice. Amen. Thanks for being here today. My contact info is below if you'd like to follow me.